Hey, it's Bryan Schmidt over at Cross Country Mortgage. Hope you're having a good day. Wanted to talk about a situation where we had a client that was expecting to purchase a home with a cosigner, and they were adamant about that. Oh, we both have to be on the loan, and what happened with this file? So we have a borrower who is self-employed. And then we had a co-borrower, co-signer on the loan, I should say. It was not a spouse or a significant other. It was a separate family member. They were buying this property together. And they were adamant about being on the loan together. Well, the self-employed borrower, totally fine. Income was good. The co-signer, income really didn't exist. So we're using just the self-employed borrower's income, and the debts that showed up for the co-signer on their credit report pushed the debt to income ratio pretty high. Well, about a week and a half, 2 weeks before the process was before the file was supposed to close, all of a sudden we had an undisclosed debt monitoring alert, which we get when we're in the process. So if you are in the mortgage process and you apply for any type of loan, basically you supply somebody with your social security number and let somebody pull a credit report, bam, I'm getting a notification immediately. Well, we got that UDM alert and we saw that the cosigner had opened a new account. They bought a new car. And put the debt to income ratio over the maximum limit by almost like 3%. So 3% is a pretty big ratio change. And they were not even aware that this had happened or what it could do to their file. Well, it effectively created a denial based on the way that we originally had the mortgage structured. There was nothing that they could do with the debt that they had created. But what we had to do is we then had to go back and we had to restructure the mortgage. What we did was we took the amount of money that they were going to be using towards the down payment, and we then decreased their down payment, and then we used the money that we weren't putting towards the down payment to pay off other debts so we could get the ratios below the maximum. So as an example, we paid off, I think there were 2 credit cards and there was 1 business loan that showed up on the credit report for the self-employed borrower. We took a portion of the money that was going to be used towards the down payment. We paid off those debts to reduce the monthly payments that we had to count against them, and then that made the ratios work. So that was one solution we came up with. The other solution we came up with was, let's just remove the cosigner. She doesn't have any income. There's no reason to have her on the loan. And they did not want to do that because they were buying this property together as an investment, and they wanted to have equal ownership and equal liability or responsibility to the mortgage. So that was not a solution. We could have easily just said, let's take the cosigner off, and it would have worked fine, but that's not what they wanted to do. So we restructured the loan, and we're able to close the file on time without any issues. But I wanted you to understand, changing or applying for new debt, opening a new credit card, a new student loan, or a student loan, we've had that as well. A new car loan is pretty common. Don't do those things when you're in the process of buying a home. If you are thinking you want to buy a home and buy a new car, buy the new car after you buy the new home. The purchase of a vehicle actually is going to be better for you after you buy the house, because the mortgage will show up on your credit report, and that's better for you when you go to apply for a car loan. But in addition, I won't have to count the car loan debt against your debt to income ratio when you're purchasing the home. So if you do things in the right order, you'll get a different outcome. But I just want you to understand, like, undisclosed debt monitoring happens. We will know when somebody pulls a new credit report, and if you open a new account. We do have to verify all of that, but please, if you're in the process, do not allow somebody to pull your credit report. Do not open any new debt accounts. Don't borrow any new money. Don't change anything until after we close. And if you have to, God forbid, we had a client get into a car accident. She had to buy a new car. Call us first and let us run the numbers to make sure you understand what you need to keep your monthly debt payments to in order to keep the mortgage approval intact. And we're happy to do that. If you have any questions about this, or you know somebody that might have been denied because their debt to income ratio is too high, call us. We're experts. We know how to solve problems and get approvals that other lenders just don't understand, or B, they just don't really care, don't want to take the time to do it because they're just sitting in the office waiting for somebody else to walk through the door at their local bank branch. So if you want an expert, give us a call. Happy to run numbers and help you understand how to get to the finish line. Our direct number in the office is 847-603-4778.